It's a pleasure to be here as a moderator of this first session for this first debate of the day, and to join me because talking about the next chapter is talking about investment also. I would like to call to join me here in the stage Maria Ramos, member of the Portuguese Council, member of the Portuguese Diaspora Council and chairman of Anglo Gold Ashanti. Thank you very much. Also, Haim Lakhani, President and CEO of the Lakhani Group Family Office. Thank you very much also. Gugu Tingam, Investment Executive of Women Investment Portfolio Holdings Property Limited, the WIPHOL. Nuno Rangel, CEO from Rangel's Logistics Solution. Thank you very much also. Youssef Ben Abdallah, Head of Business Development, please, can join here. Head of Business Development, Salam Alliance. Thank you very much. There. And last but not least, José Miguel Cerdeira from Banco de Fomento de Angola. Thank you all. Thank you very much for joining us. So many was already said in this in the first part of this morning, and everyone knows that Africa has a flourishing and youthful population, has natural resources and strategic geographical localization. All of these are items that must be crucial to the next future, the future where we need a more partnership between Europe and Africa for the economy of the future. So, Maria Ramos, let's start for you. You have a long career, and most of your time you have been devoted to fiscal policy and economy planning. You also have a very long career in banking and finance, both private and public sector. And you already worked also in the infrastructure area and the sector, in the National Treasury, also a long curriculum that can help us to understand a little bit more of how can European investments in Africa, on one hand, and the African countries maximize their potential and the Europe economic capabilities, because everyone tells us that we have to create a triangle between the United States, the European Union, and Africa, because it is crucial to defend this strategic importance of the Atlantic. So how can we improve, for one hand, the European investment, how can we attract them, and how can the economy from the different economies from Africa gain also with this kind of investment and opportunities that can be created with this investment?
Well, thank you very much for the question, and also let me just say that it's a great pleasure to be here today, and it's a wonderful turnout. So I think to everyone, to the organizers, thank you very much, and thanks for the invitation. I should also just say that I've actually just stepped down as the chairman of Anglo Gold Ashanti.
Sorry, I didn't have that information.
I should have made the correction. It was just a few weeks ago, so I don't think there was any time to correct it on the program.
But your experience is also very relevant because you know all the path and the different sectors.
And I am on the independent director on the board of, yes, of Standard Chartered Bank PLC. I was very persuaded, and both ministers spoke very eloquently about the need and the long histories, the connectivity and the shared agendas actually between Africa and Europe. And as you quite rightly point out, I think we've spoken and we've mentioned this morning already just the number of things we have in common. We've spoken about just how big the African economy is, what the opportunity and the challenge of demography is. And when Minister Reis spoke, I thought he spoke very persuasively, but just how common the things that we all have to pay attention to, whether you are in Africa or whether you are in Europe. the technology and innovation, the environment and climate change, demography, urbanization, trade, growth, fiscal stability, the fiscal challenges that countries in Europe face, and the fiscal challenges that countries in Africa have faced. They faced them before COVID-19. They certainly faced, so many countries on our continent continue to face so many fiscal challenges. And so I thought I'd just spend a couple of minutes talking about, so what are those challenges that are common to us, but actually perhaps more importantly, what are the opportunities? And from my own experience, I thought I'd just start with the opportunities that exist. Because if we were constructing that and we were building on to the platforms that we have commonly for growth, whether, to build building up that Atlantic Alliance or that North-South Alliance for Africa and Europe, there must be and there is a huge opportunity for investment in technology and innovation.
But is technology the main opportunity that we have at this point, or are there other opportunities? Because there's a relevant need for infrastructures also.
Well, I think technology and innovation gives you an unbelievable opportunity for investment in new forms of infrastructure. So we often
to attract new investors.
We know a lot about how we're going to invest and what investment we need in the hard infrastructure, in ports, in rail, in roads. We know that. We know the investment we need and continue to need in water, for example, in hard energy. But we also know that in order to get that investment done differently and done right, we now need new investments in technology, in innovation, in green energy. Some of that requires new investment in innovation. So I think that's one area that we need. The other, of course, is that investment in the environment, climate change, green energy, new areas of investment. I think the other very big area is the area of trade. If we're talking about Africa and Europe, trade has to be a very big area that we all need to be really focused about. And we heard earlier the colleague from AfCFTA talk about FDI flows into Africa. I think it's important to remember that FDI flows actually have increased marginally over the last decade, but they have not made a huge amount of progress. I think you spoke about $50 billion. 2022, that number is actually more like $45 billion. And if we really want to get FDI, we really need to think about what those FDI flows are, where do we need to make FDI work, and what is it that we need for FDI. And actually, it is that investment in the things we're talking about, opening up those investment channels. How do you get people to invest on the continent? Where on the continent are those investments going into? Which countries, which markets? How do you build those markets? How do you build resilience? Very importantly, how do you get investor confidence going? Which brings me to another very important area, which is actually capital markets.
Yeah.
And I think in Africa, one of the things we need to get going and we need to continuously focus on is capital markets. Not every country on the African continent has a well-developed set of capital markets. There is a number of countries that do. South Africa is one of them, where we have deep and very liquid capital markets. But for the rest, there are 2 or 3 other countries across the continent where capital markets have developed over time. But those capital markets need to be invested in. And what do you need for capital markets to invest, to develop? You need infrastructure, you need regulation, you need investment, we spoke about financial institutions, but you also need instruments, you need trade in those financial markets. And so I think it's that it's that suite of things. It's capital, it's investment, it's new infrastructure, it's investment in those areas that I think will get the African economies and that connection with Europe. I think one final point on FDI that perhaps we don't often think about, particularly in this nexus between Africa and Europe, and that is that in Africa, the stock of FDI is still, the largest holders of the stock of FDI are still Europe, or European countries. France, Germany, the UK, which is now no longer part of Europe because of Brexit, but actually it's European countries that still hold the largest stock of FDI, even though there's this shift to Asia and to China in particular.
Mm-hmm. Thank you very much. Gugu Dingam, we're talking here about the markets and the necessity of developing the capital markets in Africa. Withhold as a different way of looking to the market and looking to investment. Do you want to introduce us what do you do, what do you develop, and how you look to the investment and to the different strategic areas of investment in South Africa and in African economies? Because it is a completely different trust fund that you have. It is a completely way of investing also. The micro is here, so.
Okay, thank you, Diana. Good morning, everyone. Thank you for the invitation to Wiphold to address the forum. And I'd like to also acknowledge our CFO, Ms. Nontobeko Nklazi, who's accompanied me today. And also say the apologies for our CEO, Ms. Louisa Mojela, who couldn't be here today. Just before I answer your question, just want to highlight how I looked at the title of the 7th EurAfrica Forum, partnering the next chapter, partnering for growth. And what stood out for me was the partnership element, and I think that's very important. And with partnership, partnering of Africa and the European countries, but also partnering for women, which women make up, 50% of the world population, but they do not make up 50% of the world's wealth. And this is where Wiphold was started. With that niggling thing that we are 50% of the population, most labor providers, we are the decision makers, but we do not control the financial, we do not have financial independence. So as Wiphold, we see ourselves as a microcosm of what women are subjected to in the world. And with that, our founders, 30 years ago, this year we're celebrating 30 years. We were founded with that vision when South Africa opened up to democracy, and there were opportunities to get involved in the mainstream economy for South Africans, especially Black South Africans. And the founders found 30 years ago that those opportunities were not being pursued by women. The partnering was only done mainly with men. So what they decided to do is not sit back, but take the initiative of understanding that there was power in the numbers of women. They made sure that they sold the vision of getting more.
You talk about a dream and a vision that when you created Wiphold.
Yeah, so they made sure that they went out and sold the vision of women empowerment, like to get together as women, get together in numbers as women, invest your little savings that you have so that we can have a seat at the main table of the main economy of South Africa.
And the success that you had with this women-owned and managed Black investment firm, is it replicable? Can other countries and other companies do the same? And is it this success this model can be replicable and is?
I believe so, but it needs to take a very intentional governments to do it. In South Africa, our success has been based on how the enabling environment that was created by our government, recognizing that women being 50% of South Africa, but not being participants in the economy, they needed to ensure and put in place policies that enabled women to be at the forefront. For example, they created, for every sector, there has to be women in shareholding, women in management levels, in all spheres of employment. Women need to be, you need to demonstrate what skills development you're doing for women. You need to demonstrate what resources you're procuring from women and what social development programs you're targeting to women. So I think replicating this will take, because we've tried to replicate our model in the rest of Africa, but what we found was the difference was in those countries, there wasn't a clear policy on this is what we need to do with women. And if there is that clear policy and governments are putting in programs to make sure that women are not left behind, but are part of this development, I think it is replicable.
Mm-hmm. You say also that you have, in this vision, you have a dedicated focus on acquiring and building strategic investment in key sectors. Which key sectors do you see nowadays in African economies?
So the key sectors that are very important are what has put the European countries and the developed countries to where they are now. Investment in infrastructure, investment in financial services, in agriculture, in telecoms, in mining, but making sure that it's value-adding investments in mining in the country of extraction, and not, and that's where the partnership comes from. We need to make sure that on the mining side, the value add is done in the economies that have the resources in order to lift them up in terms of the poverty.
Good, thank you. Nuno Rangel, Rangel Logistic Solutions is a Portuguese company that looked to Africa and decided to invest there and saw logistics as an opportunity. Do you see potential of growth in this sector? Because logistics is growing, and do you see a potential of growth also in Africa in this sector?
Good morning to everyone. It's a pleasure to be here, and Diana, it's nice to see you again. Yeah, of course, there is a huge potential for logistics in
We've been talking about the logistic potential in another conference some days ago.
Yeah, but now we're talking about Africa. And it's very, very important because there is a huge potential in Africa. You see, the economies are expanding. There's very young population. And because of this, there is a market of consumers that are growing very fast. And when there is a market of consumers, you need logistics and you need efficient logistics. So for me, I see it's a huge potential. Maybe we can focus this in 3 key factors. One, you need infrastructure developments. So you need better roads, airports, ports, railways.
So infrastructures are a theme also.
It's a very important for this, the infrastructure development. Then you need regional integration, and you have the free trade area of Africa. These kind of initiatives are critical. So the trade in Africa can develop. And then, for me, a third one is you need more partnerships between public and private companies, because some of these projects in logistics are very large-scale projects, so you need these kind of collaborations. So in the end, there is a place for the word investment. So in logistics, there is huge investments that has to be made, and these big investments are only possible if the multilateral institutions, the governments, the private sector, all work together to create create initiatives and investments to facilitate the development of this.
And what is the next chapter also for Rangel? Do you see any plans for expansion in other countries more than you already have, or are you looking forward to consolidate in the markets that you already occupy? I think it's Angola, Mozambique, Cape Verde, and South Africa. Do you want to consolidate? Do you expect to expand your business to other countries?
Both. I can tell you some projects that are going on at the moment. So we are consolidating in Angola. We create a new operation for pharma logistics. So we can bring pharma products from all around the world to Angola, and then have all the conditions of logistics for pharma with controlled temperature and cold chain to deliver medicines in Angola. This is a new project for us. Another one is in South Africa. We are investing and increasing our fleet in South Africa. In the last months, with a very grown the business of mining, and we are just planning to open in the few months a new logistics hub. That will be up for helping us in the cross-border between Africa, the SADC countries, and of course is a new warehouse with a bonded warehouse, and we will open other services that we don't have in South Africa, like contract logistics with this new warehouse. Meanwhile, recently we opened just two new countries. We opened Zambia and we opened Tanzania. And of course, we are studying and we have plans to open more countries in Africa.
And is there a risk perception that sometimes works like a barrier for some companies, especially some European companies? Do you see that? Or you already know the market, it's more a perception than a real risk?
No, there is of course real risks. No, it's a different market. And you have a learning process. We start back then with Angola, the first country, and we were what companies do in internationalization. They go or very close geographic or very close culturally. So first we start with the countries that are very close culturally with us, like Angola, Cape Verde, Mozambique, and then with this know-how that we had, we start with South Africa and now Zambia and Tanzania. So I think it's normally what you have to see in Africa, you have to see more long-term. That's very important. You have to have a vision of a long term and not so short when you're comparing with Europe. No?
Mm-hmm, mm-hmm. Thank you very much. Chaim Lakhani, the Lakhani Group has been creating and managing high-quality assets, especially in the real estate sector, and different countries and different economies, such as the USA, Canada, Portugal, are there any plans to expand also to Africa? And how do you look to the African economies? It's not an economy, it's several economies, and they are very different one from each other.
Absolutely. First of all, thank you so much to the Portuguese Diaspora Council for having us, Senior João as well, for inviting us and our esteemed colleagues as well. So just a bit of more background. We are a private family office that is headquartered here in Lisbon, but I think pretty much we are the ideal candidate because we are not 100% European or African. So I think we bring a very different perspective on investments, both in Europe and in Africa. Family offices have a very different trajectory than normal publicly listed companies or private companies in general. They're very risk averse.
How do they look to the risk and to opportunities, since it's different?
Yeah, so I mean, the market for the private family offices is quite large, but then there are conditions that you have to satisfy to get that investment as well, right? So in Europe itself, obviously Germany and France leads this with almost over 5.1 trillion US dollars in terms of private family office investments. So it's quite a pull. And some things that, well, one of the primary things that we look for, obviously, is intergenerational wealth and wealth building over generations. And so we are in the family business for more than 40 years now. And this is the first thing that we look for when we go into any country, is that sustainability is there or not for the investments to grow, not year over year, but decade over decade, right? And this is absolutely mandatory. If we don't feel that this kind of, if there is a political tension, concurrently, if there is currency fluctuation that is ongoing, I mean, 10 years ago, if you saw Nigerian currency, which is the Naira, was 158 Naira to 1 euro, and today it's 1,750 Naira to 1 euro. I mean, that's a drastic change. And that obviously, but at the same time, you see the growth of Nigeria as well, and you see that it's extrapolated into several folds, right? So these are some of the things that we definitely look for when it comes to our investments. In Portugal itself, we've been very fortunate to be welcomed, and we've invested as a family office over 150 million euros, mostly over hospitality projects, hotels, apartment buildings, offices, and the like. What Portugal brings, obviously, and what Europe brings is that stability, and I think that is one of the first things that we look for when we go out to different markets. Now, of course, we have a lot of family connections and a lot of community-based connections also in the hospitality industry. We come with a very international brand called Wyndham or Ramada, if you may have known. We've got 9,200 hotels in the world. Last year alone, more than 400 new construction hotels opened up, which is almost one per day. So you can see that the growth is staggering, especially in Europe, but also over the next 10 years, as one of the keynote speakers mentioned, that the population is staggering and increasing. So the development potential is absolutely there. For tourism potential is absolutely there. Cabo Verde, for example, which is a CPLP nation, over 46% of the current supply is in the pipeline for new construction as well. So the potential is there. Now, there has to be baby steps involved for a family office to come. So like Portuguese Diaspora Council, taking missions to those countries and actually inviting key members of the private institutions there.
And can we really construct a triangle, a strategic triangle that is both relevant to Europe, Africa, and the United States? Is it possible to strengthen this?
Well, everyone comes with their own agenda, and it will be difficult. I mean, within Europe as well, right? I mean, it's not Europe is one entity. Within Europe as well,
too many countries,
and I keep insisting. I mean, we have 1 euro, but in Africa you've got 42 currencies, so it's not so easy to kind of amalgamate. And then you've got the Franco-speaking nations, and then you've got the Anglo-speaking nations, and you've got the Luso-speaking nations. So, and then you talk about the West African nations. So it's not so easy to just kind of look at. So you have to kind of chomp it up pieces by pieces and to look at specific opportunities. And then over time, that grows up.
Mm-hmm. Thank you very much. Youssef Ben Abdallah, we already talked about the young population, the potential of growth of some African countries, which is different from the European Union, where we have a demographic winter. How does the insurance sector looks to the African market? Are there possibilities of investment growing, and is it the economy of the future?
Thank you very much for the question. Maybe first I just want to say that, I mean, partnering for growth is your team today, and just want to say that I come from a company called Salam Alliance, which is a partnership between Salam, which is a South African-based company, and Alliance, which is a German company. So, I mean, I'm just the example, and I'm based in Casablanca in Morocco, in between, I mean, maybe in the middle. I just wanted to say that, yes, partnership is really key, and it can be really a success. So, I mean, Salam is a $20 billion US company globally, and Alliance is $153 billion US company. And today, Salam Alliance is a $3 billion US company, by far number one.
So it was already seeing the future when it decided to join together.
What I just want to say regarding, I mean, the insurance sector and your team of, the investments and internationalization in Africa and between Africa and Europe, I think the first thing maybe is to say that today in Africa, and I've been also listening to the people from AfCFTA Bank also speaking about that. The first thing I wanted to say is that today in Africa, we do have capabilities also in terms of risk transfer to secure investments. So I just want to say...
But he also said it is important to improve and to reduce that risk, because create more and more instruments to reduce that risk.
Yes, I think the first thing is that, for example, in Africa globally, in terms of catnat exposure, because it's one of the biggest risks when we talk about, insurance globally, catnat exposure, depending on the countries, but globally it's less than in the European continent, So I just want to give one example just to show that today, in Africa, we can have, players that can really secure your business with A-rated paper for, also lenders when they want to invest in projects. So I think the best way to say it is about like one of our last live examples, where, for example, in Morocco, there is an investment for a wind farm, a big wind farm, 500 megawatts, one of the biggest in Africa. In Africa, yes. And so the broker, it's a Moroccan broker who was like trying to search for insurance for that construction of this big wind farm, 500 million euros. So what he did, he has a partner, I think they're with us, with the Brokers Link. So they went to Europe to search for capacity, to search for solutions for the insurance. And the broker they went to in Europe, they just said, well, okay, we know some people in Africa, maybe let's ask them. So they went to the London markets, to the, French, German market to search for solutions. And they also came to us as Salam Alliance for also a solution. So when we gave our offer, we covered the 500 million, 100% capacity, while the others were giving like 20, 30%, and also our price was the best. Just wanted to say, and maybe now with I have one of my friends here who is a broker in Mozambique and in Angola too. There is a project in Suez projects in Angola for water, for water things, etc. So when they came with the offer from France, it was like double price of what we are doing in Africa. So I just want to say that, in Africa today, we do have the capabilities to secure, and with banks like AfCFTA Bank, etc., we do have the capabilities also to handle the big projects ourselves.
So the insurance sector, as a long-term investor, also can mobilize some...
Yes, it's true. So we are not only, taking the risk and transferring the risk to our balance sheet, but in our balance sheet, we also do have, a lot of assets in front of our technical reserves. Of course, that belongs to our insureds, but those assets are meant to be invested also into the economy. And yes, so for example, I know that globally Salam manages something around 80 billion US dollars assets in terms of investments globally in Africa. And as I'm an old Salam guy, I don't know how much the amount for Alliance, but for Salam, it's only for Africa. Mm-hmm. That's what I wanted to say.
And let me ask you this. With your experience, how would you convince someone from another big European company to create an alliance such as Salam and Alliance? How would you convince them to do that in some other country in Africa?
Well, I think my point of view is that there should be first an interest, and I think they need to have an interest to go to Africa, and then afterwards we need to see what will be blocking them from investing, So what I just want to say, it's true that when you look at Africa from outside, you just see problems, and governance issues, etc. It's true that we do have issues in the continent, and I think the other thing is that you can also see, the positive thing. The positive thing is that everything, needs to be done. I mean, I've been to South Africa. South Africa is quite big and strong in terms of infrastructure, even if, unfortunately, it's declining a little bit with the ESCOM issues that you have now. But when you go to the rest of Africa, I mean, you see that, I mean, there is a big, big need in terms of investments in infrastructure. I mean, in some countries, for example, I lived in Gabon for 3 years. So there, I mean, when you are there, when you go to the supermarket, you only have products imported from France. So they don't almost, product anything in their country. Everything, so how, I mean, how do you want to build or to do this when you're importing everything? So I think there are a lot of opportunities. So for people who are in agriculture going to Gabon, they have rain, they have sun, they have a lot of water, they have a lot of land. So
the conditions are all there.
If you want to, and you have, it's not a very big population, unfortunately, in Gabon. It's not the best example, but at least, I mean, and you can be very strong in agriculture, going from Gabon as an example. And when you are a Mota Angel, we are talking about, for example, Portugal. When you are a Mota Angel, I mean, the opportunities for investment in infrastructure globally in Africa is very, very huge because everything has to be done. So there is a big need. There are some challenges, but there are ways, to cope with those challenges.
Thank you very much. José Miguel Cerdeira, working at Banco de Fomento de Angola, you know the Angolan economy, you know the dependence on oil, and it's important also when we have economies and we don't have a capital market working to give the capacity to invest. What is the role of banking in this kind of economies to help the investment to diversify economies and to reduce the dependence on one only resource?
Yes, thank you very much for the invitation. What I would say, first of all, is that the role of a bank is not only to invest its assets and the assets that depositors have put in their balance sheet, but most of all is to protect these funds and to make sure that they are there when they are needed. And
that is more important when you don't have a capital market that could help that kind of investment.
Yes, so, for example, in Angola, it's easy to look at BFA, my bank, and say that the investment is mostly on treasuries and we loan mostly to the state. But when you have an environment of very high local interest rates and the bank is interested in keeping depositors' funds safe, then it's difficult not to look at those opportunities as safe and good opportunities. But what I would say is the purpose of the bank, and the bank is doing, is looking exactly at the sectors where the economy needs diversification and where the economy needs funding, and taking the step forward to, let's say, do a bit of outreach. So, for example, in our bank, it's clear that we've done that in the last few years. We had to train ourselves and specialize ourselves, for example, to deal with loans to agriculture, create our own specialized department to, on the one hand, train ourselves to evaluate these projects which need a different kind of time frame, a different kind of evaluation, but also help farmers in Angola, small but also mid-sized farmers, to get their numbers in order, to get training. And so I think that is one role. And I would add that the role that Europe can play when looking at investments in Africa and internationalization.
Can it do more, European institutions? Like European Investment Bank?
It is doing something, but it can do more. What I would say is that it can do different, while it looks sometimes at these big initiatives like the African Continental Free Trade Agreement, or it's on the text of this talk. the eco currency, when it looks at these projects, sometimes it's missing stuff that's already working and that needs critical help. So in the case of the African Continental Free Trade Agreement, for example, even the agreement assumes that the regional free trade areas that are already working are very much important. And so, for example, if you look at Angola, Angola is part of the Southern African Development Community, the SADC, but as it's not part of the SADC free trade area because it's long postponed, its tariff offers and all that. And sometimes it would be better to go and look at these things that are almost working and push them to work further than trying to look at big things that are important. I'm not saying the African Continental Free Trade Agreement is not important. If it works, it is huge, and it can really transform the dynamic of intra-African trade, which is really low. But the problems are not only there; they're with logistics, like Conselho people know very well, and Europe is starting to go there. For example, when you look at the Lobito corridor, which is also looked at as a very large project and can be prone to be looked at and approached as one of these mega projects that have these flaws when you look at them. But if you look at them very specifically on the grounds of just getting a line to work to get useful resources out of Angola, but mostly out of the DRC and Zambia, it is something that's going to be very useful. And the US is, you were talking about triangular, the US is putting significant money there. There's a loan agreed of over 500 million to the company that holds the consortium to the Lobito Atlantic Railway. Italy has also said and has committed something like 300 million to develop the railway on the side of Zambia. So if Europe could do more if it does more to look at specific interests.
We don't have many time, and I need to ask you this. Some banks flew away from the European market because of regulatory questions. Could supervision in Europe also ease its measures and the way it sees the risk in Africa to emphasize this triangle and help more banks to go to the European market again and help this strategic alliance also?
I'd say that regulation in the financial sector is always complicated because if you want to tone it down, then other sectors and other investments don't want to, don't feel safe if they feel that regulation in Africa is toned down. So in Angola, the authorities are always looking to try and get equivalence to European regulation standards, and I think that's the measure. What I would say, for example, that in other regulations where Europe could do more if it adapts more is, for example, when you look at climate change, you go and have regulation and laws coming into place that are going to say, well, if this part of forest is turned into a crop for something like coffee, then that's deforestation because it wasn't the original forest, and it faces much more restrictions for exports from Africa to Europe. And well, on the one hand, maybe that's not very fair even for the environment because this is something that's going to help everyone out there. And on the other hand, if it's going to happen like that, then Europe should look and try at least to finance that change and to help those improvements occur.
Thank you very much. We just have 5 more minutes, and I would ask you to be very sharp in your answers. Maria would like to complete this idea, and I would like to make a last question for all of you. If you could point a measure that was strategic now for improved investment and improve the capacity of economic growth and the connection between Europe and Africa, what would it be that measure? It's not easy.
So it's not going to be too different from what I was going to say. I don't think the answer is in necessarily lowering regulation, particularly in financial services and banking, as an example. I think the real investment has to be in supporting, improving, collaborating, and in a stronger partnership with financial services across the African continent. And I think it's in investments in big things and difficult things like data, and standards and data standards, which actually, by the way, also still need to be harmonized across Europe. And I'm not even going to talk about the United States, because the issues there are, we're talking about this golden triangle.
We left the geopolitical questions to the other panel.
We're going to leave that. But I think that investment in some big things, like a partnership around data, and I think the other big partnership that we haven't spoken about, because it's going to be spoken about later on in another session, is around talent and collaboration, and a partnership around talent, because I think we can do a lot of things on the technical side, but that collaboration around talent, and we heard earlier from the Dean of the university, but those partnerships are the long-lasting partnerships that really make a difference and give you long leverage returns, and give you a very long line in terms of dividends and returns.
Thank you very much. Good Ingram, what would be the critical measure that you would choose?
I think for me, based from where I come from, it will be investing in the human capital of women, through education of the youth, the partnership, making sure as we talk about investments, women investment, partnering with women is at the forefront, addressing equal pay for women. And I think that investment will provide an attractive return on investment with less risk. We know that women businesses have less risk. The insurance side will know that. That women provide, there's less risk when you invest in women. So a small investment has a much bigger impact, and that will unleash value.
Thank you very much. Nuno Rangel, what would you choose?
Yeah, I think to have development, you need investments, and for that you need finance, you need banking, and that I think is the most important, because in Africa it's very difficult to get financing, it's very expensive to getting financing. So I think that will be the most important. And another thing is collaboration. I think, like I said before, between the government, the multilateral institutions, the private companies.
Mm-hmm. Thank you very much. Chaim Lacanio, what do you think it's crucial?
So, because we come from the hospitality business, it's a bit different. We always talk about the metaphorical bridge, but I think a physical bridge is actually needed between the two nations. And I think earlier it was said that between the African continent and the European continent, it's only 14 miles difference. The shortest, I think it's the Strait of Gibraltar. And I think that project has been talked about for more than 50 years, but nothing has been done on that level. And now they're talking about this from Tarifa to Tangier, which is about 14 miles. I think a physical bridge improves that tourism potential. The clear example is between US and Canada, how that goes between tourism. So I think a physical bridge will make a lot more sense.
So simple. Thank you very much.
So that might help, yes.
Youssef Ben Abdallah.
Well, I think the measure would be for me to ask all African leaders, or said yes, presidents, etc., is to make it forbidden to export raw material from their countries. I think that really would help a lot the continent.
Thank you very much. And now, José Miguel Cerdeira.
I would get 4 people that are here in this conference together, Mr. Rangel, Mr. Durão Barroso from Gavi, and maybe the Minister Paulo Rangel from the Portuguese Foreign Office, and Ms. Lutukuta from the Angolan Health Ministry, and get them to see how they can distribute the existing malaria vaccines to Angola, because if you reduce infant mortality, you get to reduce fertility rates, you get to invest more in education per kid, and you even get to save more per family, get interest rates down, and get more investments in the energy sector and industrialize.
So, José Miguel Cerdeira, Youssef Ben Abdallah, Raim Lakhani, Nuno Rangel, Gugudin Gaman, Maria Ramos, thank you all for your contributions in this panel.